I'll also cover off on the recently announced strategic partnership with Iluka Resources. Iluka Resources is a multi-billion-dollar mining group. We have executed a supply agreement for up to 30 years for monazite feedstock supply from Kangankundi, and comes with associated funding as well for stage 1 and a ROFR for stage 2. So I'll step through a couple of slides. So this slide provides a quick corporate snapshot. From a market cap perspective, we're 450 million on a pro forma basis. We have declared final investment decision following our partnership transaction with Iluka. We were successful with a 91.5 million institutional equity placement. We do have Petra in the room with us. They were our lead managers, and we're grateful for the excellent transaction. It was priced at a 48% premium to the 20-day VWAP, so it wasn't a heavily discounted raise with attaching options. It was a fantastic transaction, and there was about 40 accounts globally, all institutional asset managers across the US, Europe region, and Asia Pacific. Before I dive into Kangankundi, I might just talk about the commodity itself. So rare earths, there are 17 rare earth elements. The two key elements that are high in demand is neodymium and praseodymium, or what they term ND or PR and ND. NdPr is used in permanent magnets or REPMs, which is used in the drivetrains of electric vehicles. It's used in wind turbines, humanoid robotics, and day-to-day applications. So on your smartphones, headset, speaker systems, they all require a permanent magnet. Even your petrol cars or internal combustion engines, your window wipers, car seats, power steering, all require an NdFeB permanent magnet. Simple stuff, even your AC units at home are all moving to an NdFeB permanent magnet. There is no substitute in terms of performance. It's 10 times stronger than the ferrite magnets that you use on fridge magnets or kids' play set. There is a huge deficit that is looming. So, in terms of assessing the investment criteria into rare earths, you do want assets that have high ND and PR. So on that note, Lindian's Kangankundi were very blessed with the largest deposit in the world. We stand at 1.1 million tonnes of contained neodymium and praseodymium. This is generally just a life cycle in terms of mining investment from first, from a moose pasture, exploration through to production, and it's about 10 years. Some assets take up to 2 decades. Lindian is well positioned. The board has declared final investment decision. We are under construction, and there's only 2 assets that's called FID. In the rare earth sector, ex-China, there's only 2 material public listed companies, MP Materials in California, through the Mountain Pass mine, and Mount Weld, which is owned by Lynas and processing through Kuantan in East Malaysia. Both those 2 companies have extremely large market cap. MP Materials close to 20 billion Aussie dollars, and Lynas 13 billion dollars. If you look at Lynas, they reported circa 100 million EBITDA for the last 12 months, so you can just draw some parallels around the upside Lindian can enjoy. I think Lindian will, at today's current spot price, produce 100 million EBITDA. So you do see, a huge, production re-rate, if we deliver on time, get through the commissioning next year. So we announced a DFS 1st of July in 2024. It was done to a ACE Class 2 estimate, so -10 plus 15%, while moving to a Class 1 estimate. The DFS was done based on just JORC compliant ore reserves, so there was no inferred materials. The initial mine life is 45 years. The NPV generated is $1.1 billion, and based on unlevered free cash flows, the internal rate of return is high at 99%. The grade is high, it's 3%, so 3.1% for the first 5 years, life of mine at 2.9%. JORC ore reserves stand at 23.7 million tonnes. So by way of comparison, if you have a look at some of the carbonatite assets that we have, or in terms of our peers, they're below 1%. So a lot of the assets are around 0.9, 0.95%. We stand at 3%. So from a grade perspective, head grade, it's a great start, and that really drives our cost of production lower. Mineral resource, I think what the Malawian government will be pleased to hear, it is 261 million tonnes. It has the potential to become a multi-generational asset, providing direct and indirect benefits to the Malawian community. It will be 200 to 300 years if you do include the resource. Upfront capex is low, stands at 39.8 million. It includes 12.5% contingency within that estimate. Well, 15 months from mobilisation of our main contractor, we're looking forward to award our preferred DNC contractor, and to reach practical completion, we're looking at Q4 next year. Project Blue, which is the team that was, came out of Roskill and was actually bought by Wood Mackenzie. They independently did a global cost curve, and we sit in the first quartile. So we will be one of the lowest cost producers globally. We'll produce at around $2.92 a kilo for a total rare earth oxide. So by way of comparison, if you look at some of the concentrate peers that we have, a lot of them are north of $15 a kilo. So it just really shows how low cost the project is. And there's a number of reasons why it is low cost, and I'll step that through shortly as well. We're fully permitted to commence main construction and commence mining operation. This is a Gantt chart just to show some of the key catalysts and timelines. You can see, we have declared FID following the Iluka transaction and also completing our FID equity raise. Practical completion, as I mentioned, will occur in Q4 next year through dry commissioning. We'll commence mining operations around the same time. Stage 2 is an expansion of production of monazite concentrate. We have been approved by the Malawian government to increase, so our mining license has been expanded in terms of footprint. We are running in parallel Stage 2 expansion feasibility study. The Iluka partnership, we're delighted to partner for a long, strategic partnership up to 30 years. So the key elements of this includes first is a supply agreement, initially for 15 years for 1/3 of production from Kangankundi. There is an option, or what they call a right of first refusal, to increase that by another 15 years. It is supported by funding, so $20 million in US dollars. It's a flexible facility. We can prepay that without any penalties. There is no financial covenants that you see in typical commercial bank debt around debt service cover ratio or loan life cover ratio. So there's actually nil covenants, not even covenant light, and there's no attaching options, warrants, or royalties. So it is, akin to a friendly, prepayment style facility. We do have price support, which is important. Unlike gold, on the LBMA or LME, where you can hedge, you can't actually hedge rare earths. So what we have embedded in the partnership agreement with Iluka is a guaranteed floor price that sits above our cost of production. So as I mentioned, our cost of production is $2.92 a kilo. The floor price sits comfortably well above that. So you remove merchant risk, price risk from your investment. But we will be, the pricing mechanism is the high of prevailing and the floor price. As most of you would have read in the newspaper, there's a lot of focus on rare earths. The US government, through the Department of Defense, announced a $110 kilo floor price for Mountain Pass in California. That really saw, good government and DFI support for the sector. So we do have a construct in there, what we call the MP, similar construct. If there is a floor price similar, and there are working groups and the government is talking about, supporting the industry with a floor price, that will get passed through. So our pricing is based on the Eneabba realised price. Eneabba, for those who aren't aware, it's a facility that's been funded by the federal government through Export Finance Australia. EFA has provided a $1.25 billion facility through Tranche 1, and Tranche 2 is $400 million. So it's a multi-decade, multi-user facility that can take third-party feedstock. So we're pleased to partner with Iluka for 1/3 of our product sales. Yes, I mentioned you could see the headlines through US DOD. We have the AFR here with us today as well. West Australian Reuters, there is good tailwinds in the sector. Rare earths, enjoyed high pricing. About 3 years ago, we were around $170. Today, we're hovering around $90 a kilo for ND and PR oxides. Board and management, we have strengthened the board and management team. Unfortunately, Robert Martin and Zach Comer, our directors, can't be with us. They are talking to additional customers and working through additional transactions, which are confidential. Rob is experienced owner and operator of mining services companies and also mining companies. He's been leading the charge, and it's been a pleasure working with him. Zach's chair of the project review committee. Zach's got a strong background in commissioning. He's a chemical engineer, but by education, he's worked with BHP, Fortescue. He was part of the commissioning team for the Icarus project, which is Inpex and Total, and he has international experience, worked in South Korea and Sweden recently as well. We've got Yves and Park, who are extremely supportive directors. Yves is a bauxite expert. We do have a bauxite portfolio. He was formerly at CBG, which was a JV between Rio Tinto and Alcoa and Dadco. We've got Ben, who's extremely experienced COSEC. So I touched earlier just about economics. Stage 1 produces 15,300 tonnes per annum of monazite concentrate. using today's spot price, we're looking at 100 million EBITDA. I'll give credit to the team that put the DFS together. They did use a sensible price deck. So a lot of mining companies do use hockey stick price decks, and the team that delivered on this DFS used $82 for the first 5 years against a spot price today of $90. Life of mine is $109, and again, this was Project Blue's base case forecast. A lot of market consultants are forecasting well above that, and as I mentioned before, prices were around $170. Today it's at $90. We will produce 100 million EBITDA. Our break even is below $40 a kilo, so we are a very competitive project. In terms of the cost curve, we do sit right next to Mountain Pass. This was done by Project Blue, as I mentioned. Some of the key levers and reasons why Cancun is so close is it's effectively, it's on a hill. I think there was a photo on the front cover that shows that mountain, and our strip ratio is 0.2 to 1, life of mine, and 0.1 to 1 for the first 5 years. So a lot of projects that you do see in other parts of the world have strip ratios up to 10 times to 1. So it is low cost. Our circuit is a gravity and WIMS and limb separation circuit. We are not going through oxide flotation, it's physical separation. And the key element is it does produce a high spec monazite concentrate grading at 55%. So the market minimum is 40%. 50% is what they call the Shanghai benchmark, and above 50% is that premium grade monazite concentrate. So Iluka, has the partnership made sense because they were looking for the highest quality feedstock, and Kangankunde can provide that. And for those who are in the rare earth ecosystem, some projects concentrate grade are below 30%, some are below 10% as well. So to get through a gravity circuit of 55%, which has been tested in internationally recognized labs, it's been downstream facilities in the USA and also in Asia, it has consistently come back at 55 to 60% trio grade. And that's important because grade is king, and that's what, the product that we will sell. You can see here in terms of size, so if you exclude Lynas and MP Materials which are production, the next largest below us is Peak Rare Earths, that's in Tanzania. That's been acquired recently by Shanghai Resources. Lindian's resource stand at, from a total rare earth oxide contain above 5 million tonnes. So we are a large, high-grade deposit. This is based on total resource. If it's just on reserve category, we'll be further to the right, around 3% head grade. What we're looking forward to is also stage 2 expansion. So stage 1 is 15,300. Our DFS contemplated a doubling or tripling of capacity up to 50,000 tonnes. Stage 2 expansion is substantiated by 3 things. First is we are fully permitted for the expansion. Number 2, we are funded through the Iluka partnership, through a right of last refusal they have to fund 50% of the capital costs for the expansion. And 3, we will have the contracted revenue. Iluka's offtake agreement for 6,000 tonnes per annum of monazite concentrate will increase by 25,000 tonnes to 31,000 tonnes per annum of monazite con. So it is de-risked. We are still going through a beneficiation plant flow sheet. It is conventional, there's no novel technology, but we're looking forward to de-risk the project through stage 1 and go quickly into expansion into stage 2. Flow sheet is simple, and mining operations is drill, blast, load and haul. It's open pit, it's not underground mining. We go through 2-stage crushing, through a ball mill, a gravity circuit, which will get you a 40% trio grade, and then followed by limbs, WIMS. And the flotation at the back is a sulfide cleaner flotation, scavenger float, not an oxide flotation, and it's a high-value product. So we're talking kilograms, not tonnes. So it will be bulked. Iluka's preference is 2-tonne bulker bags in a 20-foot container. So that is, the logistics shipping cost is low. There was, I think, a question that was supposed to be, and I'll save more detailed answers for later, but it is low in uranium and thorium, so it's not DG7 cargo, dangerous goods. So it is below 10 becquerel a gram. We will be shipping it it's through containerized transportation. This is a site layout and a 3D render. Most probably don't need to touch on that. We are doing some additional test work and ANSTO. A lot of the civil works have been completed. We have completed a site access road about 5 kilometres from the main highway. That was performed by Mono Angle. Mono Angle is well established in Malawi. They were originally involved with Paladin for Kelekere, which is now owned by Lotus Minerals. We're very pleased that came in under budget and ahead of schedule. Okay, I might close on this slide. So this slide shows some of the community benefits. You could see Dr. Kenneth there with our Executive Chairman, Robert Martin. They are extremely supportive. If we are engaged with local community, there is local employment. The IMF visited site at Cancun recently, and also the United Nations. From a GDP perspective and US to Kwacha conversion, there is a lot of support that this project will provide to the communities. Thanks, everyone.